Prop firms absolutely hate this strategy. In the next 60 seconds, I'm going to show you exactly how I use this exact model to generate over $25,000 every month as a day trader. The simple model that I use every single time I trade is called the 8 EMA trend continuation model, or the 8 TCM for short. Now to set this model up, all we're going to be simply using is an 8 length exponential moving average, or 8 EMA for short, and it's a simple green line right here. And with this model, we're looking for two simple but very important things. Now the first thing we're going to be looking for is the current trend of the market. So if it's making higher highs and higher lows over the 8 EMA, then we can see that the current trend is bullish and we're looking for longs. And then vice versa, if we see lower highs and lower lows being formed under this 8 EMA, then we can see that the trend is bearish and we're looking for shorts. Now using this example, we see that higher highs and higher lows are being formed over this 8 EMA. And if we got in at any point in the market, we would have caught a massive move to the upside. Okay, so let's take a look at this example. We have lower highs and lower lows being formed under this 8 EMA, which signals a strong bearish trend going to the downside. And since we know the trend of the market and we see that price is located right here, we're now ready for step 2. But if you get it wrong, it's gonna make or break your entire trade. Now, in order to actually get into a trade using step 2, we need two things to be true. The first thing we need is either A, price to come over the 8 EMA, come back down and close under it, or B, touch the 8 EMA equilibrium zone, reject off of it, and close under it. And once we see that close under the 8 EMA, we're finally going to be able to get into a trade. And as we can see, 4 candles later, we finally got that nice rejection candle off this 8 EMA. Price tried to push over the 8 EMA, but it respected the 8 EMA and came back down to close under right here, which signals that strong bearish trend continuing to the downside, and we can finally get into a trade. Now, all we're going to do here is target a nice 1-to-2 risk to reward ratio. And all we're going to do is just let the trade play out. And as we can see, price continued to the downside and it respected the 8 EMA, and we ended up securing profits on the trade. I made a free PDF showing you exactly which high probability setups I take whenever I trade. If you want a copy, just click the link in my bio and you can claim it there.